But in place of stock of the day today, I thought we'd ask our expert guests for a pick in what's being called the new FAANGs.
Who made that up?
So what's a new FAANG? Merrill Lynch, actually. What's a new FAANG?
Oh, well, it's got to be true.
Well, you must remember that the term FAANG was coined to refer to those top 5 US tech stocks, but with tech on the out, there's a new FAANG in town. So it is FAANG 2.0, and it is fuels, aerospace, agriculture, nuclear and renewables, gold, or metals and minerals. So quite the list there. And I did ask my guests for just one, but they're both overachievers. So they've given me a pick from each of those areas. Adam, you're here with me. Let's start with you. Okay, in the fuel world.
So we're staying Aussie.
Stay Aussie.
Centric for that one. And certainly Woodside.
Yep.
Fantastic.
It's making money hand over fist right now.
It is, and it's also very interesting that once they do this deal with BHP, sort of June 30, they won't have much debt at all. They'll be pretty much clear, free, and in a growth phase as well. So it really sets the company up for a very large 2022, 2023. And certainly from there, Santos as well, starting to run a little bit now. We were sort of a couple of weeks ago on the show, we were a little bit perplexed why Woodside was running so hard and Santos not. Santos is playing a little bit of catch up at the moment. But yeah, Woodside they're probably a little bit tough up here with oil prices where they are, and I think there will be a little bit more consolidation. But for the safe bet, Woodside, and for all those other people that like a little bit more risk, Santos is probably a good buy.
Got it. Junbei, let's get your picks or pick in that fuel theme.
You got all my top picks. I've got Santos. And but I think I did work out why the differential in terms of performance. It's because Woodside has the contract that they're more exposed to the spot prices. So that literally the high spike in all that energy price goes straight to the bottom line, whereas Santos will take a bit longer because their contracted price is much lower. So I think that's why. But you're absolutely seeing that underperformance is now sort of started catching up a little bit. I still prefer the likes of Santos because Woodside does have that big potential pressure of selling coming through when BHP does split out the Woodside shares to its shares that they'll be selling. But yeah, I absolutely agree. These two stocks will be really well leveraged to the current price.
Yeah, and we spoke with Meg O'Neill, who's the Woodside CEO yesterday, not ruling out, special dividends, buybacks, because again, their balance sheet is in such good shape, or will be, as they benefit from these rising prices. Okay, Junbei, aerospace. What in that area could you think to pick?
I must say that in that area, it's pretty tough because so in Europe and US is quite a big defense sector, where Australia is quite tiny. So there's one Austal boat which is kind of exposed to that sort of whole defense spending. But the problem with that stock is that they've got a big earnings hole to fill, and I think in the next 12 to 18 months they have to win a lot of contract to do so. On top of that, I think there's so there's really limited exposure. There's one more actually. I think Adam is going to jump in with that name. EOS, that's it.
Yeah.
Oh, EOS.
Yeah.
Do you like it though, or is this you're being kicking and screaming to this aerospace theme?
Or defense, because it's more defense, and they make guns. So the problem is with this stock and a lot of these defence stocks is that they've got really great contracts with US government or Australian government, those kinds of things, but they trade by appointment. So in other words, it's very lumpy. So if they win a contract, they make a nice announcement, everything sort of goes up a little bit, and then from there sort of comes back down again. So it's really hard to plan or invest in these kinds of things, and the chart looks absolutely horrible as well. But you can see every time it's sort of, if we overlaid announcements, you'd see that sort of tick up and then come back down. So, and also usually the US government as well as the Australian government, they can, with a stroke of the pen, just terminate that contract and then their business model's gone. So I'll be really careful. I mean, Boeing is probably your biggest bet in international space. And then there's plenty of US defence businesses in there as well. But, potential Boeing, I think, would be one for investors to look at. Yeah,
and that might have been more interesting if you're talking sort of cybersecurity. But we're not making up rules as we go. So now that I've got you beside me, Adam, Agri. I mean, you should be able to find something Australian listed.
Yeah, well,
here in
I
this
think
space.
Jumbo is going to talk New Farm. Maybe I'm speaking a little bit out of turn there, but she likes that one. But I think there's an ETF called Food.
Yeah.
It's a beta shares one. That one has actually done pretty well over the time. Got a little bit of a kick up with that sort of exposure in Europe and wheat and those kinds of things. But Food, FOOD, is a great way to get broader access to the agribusiness space.
Got it. Junbei, how do you look to play this food inflation agri theme?
Did I get it right, Jumbo?
Oh, I wasn't going to say New Farm, but New Farm looks very interesting at this point. But I was going to say, look, there's a winner, which is so far that's being GrainCorp. It's not exactly linked to the prices things, but it just we're having all these bumper crop and then now potentially shortage in terms of grain. Because of the war that's happening, and they put them in a good position. So so that stock will do pretty well. There's another one that looks quite interesting. It's been hated for so long and it's had so many problems, and right now potentially having a bit more problem because of floods. It's Costa Group. It used to be one of those favorite stock when the weather condition was okay. They went through hard time during the COVID, and they couldn't find the staff shortages, the fruit pickers, and now finally they've come through, and you're looking at pretty good growth from here on. Now flood is potentially will have some damage to some of their crop, but the company have commented that it's nothing material. So I think altogether it does make that stock pretty cheap, and it will give you pretty good growth for the next couple of years. So that looks interesting in the small cap space.
The other one is probably Elders. We just came out and initiated coverage with a $15 price target on that one, and that's got the bank, it's got all of the agri kind of things, and it's sort of a Macquarie Bank of the agriculture space. That's nice and safe for investors as well to have a bit of a look at Elders.
Okay. Nuclear, Adam? Renewables?
Yeah. I'll stay in the renewables. I mean, obviously uranium's going crazy at the moment, over $60 a pound at the moment, so absolutely going crazy. How long can it last? Well, potentially it can. Obviously in that sort of uranium space is very, very good. But I've gone with one of the renewables, which is Calix. CXL is the stock code. It's just getting over $7 again today, so $7.16. So really like this one. It's a good little business. They've got lots and lots of things that they can talk to about in their business models. But really what it is one of the biggest things that they've got is that they can take heat out of cement production. Mm-hmm. Okay.
I was at a lunch this week where
Right.
it came up that cement and concrete is like the last frontier in terms of emissions, that they're worse than everything else.
Absolutely. And so these guys have got the ability, and it's really like I'm simplifying this, but it's a tube that they put around the smokestack.
Yeah, okay.
And they're able to take a lot of that heat or the CO2 out of that cement production, and then they basically get royalties just ticking through over the time. And they've got Europe sorted out. They're going to be in the US. It's a great little business. Calix is the one.
So that's your pick in the renewables. What about you, Junbei? Did you go nuclear with uranium, or did you go renewables?
Look, I actually am not going to have a pick in this space. I think Calix does sound very interesting, but from memory, I think they haven't even started producing for the contracts. Those contracts.
They've got contracts, yes, but the royalty stream hasn't started yet. Yes.
Yeah. Okay. Yeah. So I guess for me is that some of those. For me, the issue is that because they're still very, very early stage, but that one certainly looks very interesting. Share price done very well, but for me, it's still many years away. In terms of the profit, so a little bit early for me. But it's a very interesting sector.
Got it, Junbei. And we'll stick with you, Junbei, in the gold, metals, and minerals. This is quite wide. You can cast your net wide. So what would you pick in that space?
Yeah, look, in terms of gold, it will be my Northern Star as the top pick. I guess the metal, what was the other one? Oh, minerals. Okay, well, look, copper is something like, and plus is lithium mineral. Yeah, we've got lithium as well, just simply because that structural growth driver underneath them. And, share price being a little bit volatile for the lithium, but it is something you do want to buy on the pullback. Sorry, that is.
No, that's enough.
Yeah.
That's enough. We've got to move on. Adam, what's your pick out of gold, metals, and minerals?
I'm going to stay with the commodity. GOLD is the ETF that I like. Also PM Gold, if you're looking for something that's a little bit smaller, but also has a lower MER. PM Gold is one, but GOLD is one that we put for clients in portfolios.
Got it. Okay, I don't even think I'm going to be able to read my notes on that one when we get to the wrap up. But guys, thanks for playing along. So those are the new FAANGs, some picks in that space.